Hey guys, Eli here, and on today's video I want to talk about my investment strategy, whether it be if I'm buying gold and silver, whether it be if I'm buying stocks. And let's start now. Guys, if this is your first time on this channel, please be sure to hit that subscribe button and also hit that notification icon so you guys get future notifications of my future videos. And please hit the thumbs up, it really helps out with the YouTube algorithm. Alongside, make sure you guys leave something down in the comments below. If you guys want to join the Urban Wealth Creation Discord alongside taking advantage of some awesome free resources and becoming a member of the Urban Lifestyle channel, make sure you guys check down in the description below. So let's go ahead. Now, one of the first things I like to do before I even start investing is I do some research. And matter of fact, when I do my research, I actually research whatever I'm investing in and out. Whether it be a stock, or if let's say there's a company that I really enjoy, I really want to invest in, I make sure I research that company. I want to know everything they're doing. If I'm investing in gold and silver, I research the history. I see what the gold and silver did in the past, or why should I be investing or putting my money into gold and silver. Now, although some people may not see gold and silver as an investment, but I still use it as a strategy. I want to make sure I do my research. Before I even put a dime in precious metals, I made sure I knew precious metals in and out, gold and silver. And right now I'm currently doing my research on Bitcoin, and I'm doing a deep dive research on Bitcoin right now. So you always want to make sure you know what you're investing in. You don't want to just put your money in and just cause, hey, Bitcoin's at $18,000 and you're like, oh, everybody's buying in, I don't want to miss out, it's time to make money, everybody's making money, let me just go ahead and put all my money on Bitcoin, and not knowing nothing about Bitcoin. And it's the same thing with a stock. A lot of people see stock just tend to run up, like Tesla or any other stock that's ran up within the past year or so, and then they just go and they just put money on it because they heard somebody or they saw a YouTube video and they're like, oh yeah, man, look, everybody's here making money, millions of people making money, so I want to put my money on this, and have no idea what the company do, which doesn't make sense to me. So one of the first investment strategies that I like to pull off is research. I always do my research, right? And I advise everybody that's watching this here video too to start off with that. You always want to know what company or what item or what thing or what industry that you're investing in. And that's number one. Now, when we go into number two, I'll say if I did my research right and I like the company and I feel like there's some great upside potential, or I see something for the company or whatever it may be in the future, the next thing I'm going to do is, hey, I'm going to start a position in it. Now, I'm not going to go all in and just like dump all the money into it. And I mean, if I did that, I mean, the research, it had to be a no-brainer. But technically, I want to put enough where if it goes up, I'm satisfied. But if the position goes down, I'm okay with it. There's actually a picture here that I saw that makes so much sense, and it happened to me in the past. It goes like, when a trade immediately drops about 30% right after you place it. I mean, there's times where you can do your research and you're like, oh man, I want to put some money into this right now. I believe it's going to go up for the future. Now, this is the fact that it drops down 30% doesn't necessarily mean that you're upset or you lost money. It's just that, hey, you would rather have waited for that drop and got it even cheaper. Doesn't mean that you don't believe in the company. It just means that, hey, you know what? I could have waited a little bit and then buy. Now, the third thing I do after I do the research and I build a position in the company or whatever industry that I'm investing in, I want to be honest with you, secretly, I want the position to go down, right? I want it to go down. So if I can get that 30% drop, I want that. Why? Because I just put a small portion in it, and if it goes down, I can buy more at a discount price. So that's one of the reasons I want the positions to go down. I have tons of positions where I actually put not the amount that I want to, but it went up, and like I said, I'm satisfied because it went up, but I wanted it to go down. So there's times where it's a catch-22 where you're like, you know what, I'm not going to put everything into it, and then the company just woof, and you get 100% return, and you're like, man, gosh, why didn't I put all the money in it? But hey, I like it that way. I like to just dabble in, just put some money in there, and hopefully it goes down, and then I'll put more money in there. Now, of course, if that investment do go up, and I do really believe in that company, and I believe, hey, there's so much more potential upside to this company, then yes, I may have to average up. So when you first invest into a position and that position happens to go down, your first thought process should be, hey, do I still believe in this company? What happened? What caused this investment to go down? Or do I still believe, hey, they still have some upside potential? And once you feel that, yeah, there's still some upside potential and you still like the value of whatever it is that you're investing in, then that's when you buy more. But let's say something drastically changed, the trends is changing, and you're like, you know what, yeah, around the time I made the investment, it was a good idea, but right now with different stuff and I have more clarity on what's going on, I don't too much think I should be in this investment. Then you pull your money out. Now, the fourth thing I do want to focus on is I want to know what amount am I comfortable investing into the company or industry that I'm putting my money in. Now, the reason I say that is because back in 2017, when Bitcoin was going through its crazy phase, a lot of people took out a second mortgage on their house or actually sold a whole bunch of stuff, take out a whole bunch of debt just to put that money into Bitcoin. And we saw what happened after that. So when I'm investing, I don't want to put everything in. I have a set amount on anything, whether it be stocks, any individual company, I have a set amount, and I think about the set amount that I do want to put in, and then I just dive right in. Especially like one of my investments are gold and silver, so I have a set amount that I want to put in each and every year, and I just break that down. Now, just because you have a set amount one day doesn't mean that you're going to stick to that set amount. It's just a blueprint, it's just a guideline. Sometimes you have a plan and you have to tweak it. Maybe you feel comfortable right now with putting $100 into it, and then later on down the line you're like, you know what, hey, life changed up a little bit for me and I want to put maybe $1,000 into this investment. Now, the hardest thing about this right here is your emotions. One day you can feel like, oh man, I want to put everything in it. I want to put as much money as I possibly can, just throw it in there. And the next day you're like, man, I don't even want to have $1 in that company. So you have to figure out a way how to divorce your feelings away from your rational thoughts, if that's the correct way of saying it. Now, the fifth thing I do want to focus on is I want to have a long-term minded goal. I don't like to make short-term decisions, and sometimes it could benefit out, or sometimes it's just so short-term that you can lose money just as quickly. And sometimes, like I said, it may work out for you, but I don't want to just focus on the short term. If I get short-term gains, yeah, but my whole reasoning behind it was, hey, I was looking towards the long term. Now, if I see that in short term I started investing in something and it just quickly took off, and I'm like, hey, this price is, I don't believe this, I don't believe, like in case of stock market, I don't believe it can sustain itself, then I'll be like, you know what, hey, let me take my profit. I think it's just way too overvalued right now. I bought it when it was undervalued or fair value, but right now it's just way too overvalued. A lot of new investors are pumping into this stock or whatever it may be. Let me take my profit and I'm out. But you also had that long-term mind. You just felt like it got there too quick. So typically when I invest into stocks, I'm typically looking for a 3 to 5 years outlook on that company. When I'm investing into gold and silver, I'm pretty much looking at 10 to 20, 30 years closer to retirement for me. There's a lot of short-term decisions that I made in the past that cost me a lot of money. One example being is 3 years ago, I invested into Tesla and Apple. I had about 20 shares of Apple and around 20 shares of Tesla. Now, this was before the stock split and all that. And then once I got a little bit of profit in both of those companies, I took it out. But had I stayed and looked towards the long term for those companies, that $2,000 to $3,000 that I invested in Tesla back then would have been $40,000 today. But I only took the $1,000 profit, and 3 years later, I'm regretting that decision. But I live and I learn, right? Can't say nothing about that. Now, the sixth thing I do want to talk about is when it comes to investments, it's not just, hey, you buy the investment or you put your money into the investment and that's it. You just lay back, put your arms back and just close your eyes and just hopefully it does good. That's not the mindset you want to take. I do want to say the mindset that you do want to have is owner's mentality. Whenever you're investing into anything, you're becoming an owner, especially when it's the stock. If you're investing in real estate, you're becoming the owner of that property. If you're investing into stocks, you're becoming the owner of whatever company that is. Not the full owner, but hey, you got a portion. You own a portion of that company itself. It may be a small portion, but it's a portion nonetheless. So you always want to study your investment, check out market trends, and see what's going on in the world today that can actually have an effect on your investment. A great example being is around December, I actually invested into Carnival Cruises and I was happy with it. I liked it. But then, of course, we heard something about something's going around in the world, and just taking a quick look at it, and I'm like, hey, you know what? It's going a little bit too fast real quick. You know what? Just in case, I don't believe it's going to affect it. But you know what? Let me get away from Carnival Cruise from now. So not only that, I'm always on conference call when it comes to the stocks or the companies that I'm investing in. I'm always on the conference call. I'm always listening to earning reports. I'm always trying to see what's going on with that company. Are the executive managements making great decisions, or are they making poor decisions? I want to know the ins and outs of whatever investment that I'm investing in. Now, the seventh thing I do want to talk about is knowing your exit strategy. Like my exit strategy when it comes down to stocks is, if I have a position and I'm like, okay, cool, I'm up in this position, I want to exit the position, I don't just go ahead and just sell out everything all at once. And I have to know, hey, if I sell it out within the first year of me actually investing into it, I'm going to pay a higher tax. When it comes to stocks, of course, I'm going to have to pay a higher tax versus, hey, I can just hold on for a couple of months, or if I had the position for a whole year, then I'll pay a little bit less tax. So when I'm selling out of a position, one thing I do like to do is I like to just sell out in portions. Like if I have 400, I may just be like, all right, you know what? I'll take out 100 here and then see what else happens. And then, okay, cool, I'll take out another 100 all the way till I get down to 0. Now, there's some amazing benefits doing it that way rather than just sell it all at once. Now, the first one being is the one that we went over, which is tax. If I sell some of the shares that I actually purchased at the highest amount of me purchasing them, would have been a little bit less than the profits I would have taken had I sold the ones I got at the lowest share price. And that's just pretty much some of my investment strategies. If you guys have investment strategies, make sure you guys comment them down below. Guys, thank you so much for watching. Please be sure to hit that thumbs up. Like I said before, it really helps out with the YouTube algorithm. And also consider subscribing and hitting that notification icon so you guys get future notifications of my future videos. And if you guys want to become a member of the Urban Lifestyle YouTube channel and have access to hundreds of exclusive videos, make sure you guys check down in the description below. Thank you so much and have a beautiful day.